Thank you for inviting me to the Pareto Bond Conference. My name is Rikard Akhtarzand. I'm the CEO of ADDvise Group. ADDvise Group is a fast-growing healthcare company focusing on products and services that improve and extend people's life. We have a disciplined and focused acquisition agenda, and all acquisition targets must fit into one of the two segments that we operate in, and that's healthcare and lab tech. Our mission is to be part of the solution to the major upcoming healthcare challenges in the world. Before I go into our strategy, I would like to shed some light on our fourth quarter financials that we presented 1 week ago. We had some tailwinds in the fourth quarter. Our revenue increased from almost 97 millions up to 155 millions. That gives us an 60% growth, overall growth, with an organic growth of almost 13%. Order intake increased from slightly below 100 millions up to just shy of 178 millions. That's an increase of 79%. Adjusted EBITDA increased from 12.5 millions up to 19 millions, an increase of 51%, and that's the adjusted EBITDA margin. Basically, we're stripping out COVID effects for 2020, and that's basically positive COVID effects like COVID support from different governments. And we're also stripping out acquisition costs, external acquisition costs, to get to adjusted EBITDA. And the margin came in at 12.3%, and on the gross margin, we saw an increase from 39.5% up to 45.5%. And the increase is mainly driven by a normalized product mix. We saw in the initial phase of the pandemic a shift from our proprietary core products that goes to mainly elective procedures in the healthcare system to consumables, which normally carry a lower margin, that was used in the initial phase of the pandemic to diagnose and treat COVID patients. And we have also taken some actions in the lab segment, basically on the operational profit to improve margins, stripping out low margin products and low margin projects. That has also driven the gross margin upwards. And we have completed some acquisitions and started to consolidate them, and they carry higher gross margins. And these three things together has been driving the gross margin upwards, and I think we will gradually see an increase during 2022 to even higher levels than we saw by the end of last year. On a pro forma basis, our pace right now, 2021 plus completed acquisitions, is on sales at 690 million SEK with an EBITDA of 111 millions. Last year was a pretty intense year for us, so we kind of finalized or reached a couple of milestones. In December last year, we applied for a change in listing from Nasdaq First North to the Premier segment. And that's basically a step towards a main market listing. The premium or Premier segment, then you need to comply with the company code in Sweden, which is a requirement also on the main market. We haven't taken the final decision yet to apply for a main market listing, but we're preparing ourselves to do so. And we will come back to the market later on with a final decision once we're ready for it. In January and February this year, in the first quarter, we signed 2 letters of intents to acquire Surplus Diabetic and C-Breath. And Surplus Diabetic is a fantastic company based in Florida, US, and they supply the US market with diabetes products. And the top sellers in this company is insulin, test stripes for diabetes, and glucose monitors. And this is a typical company that we potentially would like to acquire. It's weighted towards the long-term demographic trends with an elderly population and a rise in prevalence of chronic disease. So this is spot on for us. C-Breath is a smaller Swedish founded company that basically have designed and developed a product for intubation, safe intubation of patients in emergency care. They have a manufacturing plant in Malaysia, and their main market is US. Also a very good fit into our strategy and ADDvise Group. In March, we completed the acquisition of JTech, which is a Utah-based medtech company, and they have a software that they combine with a medical device that is basically a tool for chiropractors to monitor muscle improvement and muscle strength among their patients. A very neat business, high margin, covering the US market. If we layer in JTech and the letter of intents with Surplus Diabetic and C-Breath, we now have visibility on our 2022 target to reach 150 million in EBITDA on a pro forma basis. And based on that, the board has announced that they will come back later in the second quarter with a financial update on the targets for 2022. As mentioned before, acquisition agenda is key to us, and the pipeline right now is ample. We see many great opportunities with very attractive multiples. However, the pipeline is right now weighted towards the US market, and it's also weighted towards medtech companies rather than lab companies. High level ADDvise Group, we, as mentioned, we work with extending and improving people's life with the products and services that we offer in the market. And we do that in 2 segments, lab and healthcare. The underlying market for all our products and companies are non-cyclical, and it's basically driven by demographic, long-term structural demographic trends. We also have a decentralized acquisition agenda, and I will come back to that and explain a little bit more on how we operate in terms of acquisitions. We have had resilient growth since 2011, started at some 50 million in revenues, and we are now at the pace of almost 700 million SEK in revenues with an EBITDA margin of 16% on a pro forma basis. We have a strong foothold in US, which is, I would say, the world's greatest market for healthcare products. If we look at geography on a pro forma basis, today we have 55% of our sales and operations in US. Just to shed some light on our acquisition agenda or strategy. It's a very disciplined strategy. I mean, we only focus on companies that fit into one of the two segments we have, and that's healthcare and lab. So what we want to do is basically to broaden our product portfolio, something that our customers will benefit from. And we have the ability to act agile, and we have a couple of criterias. Once you are in these two segments, we have a couple of criterias that is very important for us. And of course, high margin companies is something that we really like. Strong operational cash flow, important for us. And one thing that we specifically look for is companies or businesses that have a strong position or are market leaders in a small niche. We don't want to compete with the big players like J&J, Medtronic, and Stryker. These companies we try to avoid by being in small niches. The bid structure when we acquire a company is normally 70% cash upfront with an earnout of 30% of the total bid, normally over 2 years, and set towards the seller's forecasts for these 2 years. Once a company is acquired, we operate in a decentralized fashion, and that means that we want all operational decisions to be taken locally by the local management team, close to customers, suppliers, and employees. Key for us is to retain the business culture. We want to keep the entrepreneur, if that's the seller, as long as possible. And the best way to do that is to give the entrepreneur a lot of leeway. However, we add a couple of key support competences and functions that we believe can accelerate growth in the acquired business. And that's first of all our strategic decision making and sounding board in our COO, together with his team of business controlling, social media marketing, and quality assurance and regulatory affairs. And this team works together with the local management team to try to accelerate growth by leveraging on our headquarter competencies. Once acquired, we also implement a set of KPIs in order to monitor the acquired business. And the most important KPI for us is return on working capital. We also work with top line growth and EBITDA growth. The market drivers for all our businesses, the top three ones are population growth, rising prevalence of chronic disease, and aging population. And these are basically non-cyclical, long-term structural demographic trends that doesn't change over 1 year, 2 year, 5 years. The visibility in the market is very good, and the expected average long-term growth organically in this segment is somewhere between 5 and 5.5%, stable growth. A summary of ADDvise Group. I mean, we are a leading provider of critical healthcare equipment. We have a prudent acquisition agenda, and we have proven that we are able to acquire businesses at attractive multiples. And so far, I would say that we have acquired around 6 times enterprise value EBITDA, which is very competitive, I would say. We are weighted towards a non-cyclical market driven by these demographic trends. And one of them is typically, the rise in prevalence of diabetes in the US market. Almost 40 million people in US have diabetes, and that's a driver for several of our businesses because we are a part of the solution to that chronic disease in terms of supplying the market with products used by diabetes patients. We have also proven that we can combine top-line growth with sustainable margin expansion, and on top of that, strong operational cash flows. Thank you very much for inviting me, and thank you very much for listening to my presentation. Feel free to reach out to me or one of my colleagues if you have further questions on the presentation. Thank you very much.